Hello, everybody, and welcome to another PropMoto Live webinar. Thanks for joining me. I will be leading this up. My name is Franco Ferrato. I am the editor and co-founder of PropMoto here. And yeah, we have a really great webinar for everybody. Give a couple minutes for everybody to get their browsers open, get their coffee, tea, wine, whatever. I'm not going to judge. Really excited about this webinar here. I think we're going to do a bit of myth busting. Honestly, I think we are going to really try to explore what has been the prevailing narrative in commercial real estate, which is that offices are struggling, and that is causing a lot of pain to a lot of major downtown financial districts. And I think that's true to an extent. But I also think that there's a lot more to that equation than just kind of what people have been saying in the media. I don't know about you, but I'm a little bit tired of hearing over and over again about the doom and gloom and how everything is so bad and what should be done about it. So yeah, I think today we're really going to start to get into the data and look at some examples of where this is happening, where the doom loop is happening, and where it's not, where there are some good signs. I think this one can help people understand, how their investment thesis looks, right? Where maybe some new opportunities for real estate investment are, particularly commercial real estate investment. I think it can help us understand, what are some of the ways that we can provide a little bit more to these downtowns, right? I think cities, as well as the commercial real estate companies in the cities, are looking for ways to revitalize downtowns and to help keep a healthy downtown, even if occupancy does stay low. And I think that this idea of office occupancy has been boiled down into kind of one number, right? What's the daily occupancy? And I think while that is really important, there are plenty of other important metrics, right? As we see, you could still have people coming into the office a couple of days a week, right? It might look bad on the occupancy report, but I think that it still holds weight as far as what's happening in downtown. So again, I'm just going to wait a couple minutes, make sure everybody is here. I also want to remind all of you that, as always, this is the interactive webinar. This is happening live. And so rather than kind of waiting for questions at the end, we ask that you throw any questions into the question bar here as we're going, right? So I know a lot of you have a lot of experience with this, have a lot of really great, questions, and maybe you have your own data that you can kind of bring into this discussion. So please, let's make this, a conversation. We're happy to have, any questions come in, and we'll hopefully get to them as they go. So we can go ahead and get started. I would love to introduce my guest. Her name is Caroline Wu. She is the head of research at Placer, a location analytics provider. Hi, Caroline, you there?
Hi, Franco, I think I need, if you could allow me to start my video, that would be wonderful.
Sure. You should, you're a panelist, so you should be able to just turn it right on.
Oh, okay, it's saying you cannot start your video because the host has stopped it. Let me give that a try.
Go ahead and try it now.
Okay, there we go,
Hey,
wonderful.
there you are. Hi,
Hi,
Caroline, how are you? Good morning.
I'm doing great. Good morning. Nice to see you.
Yeah, you as well, and I'm really excited for this one. You and I have already had a couple of really good conversations about this. And what I love is that we're really going to bring some data to this, right? Like when I read all of the articles about this, the doom loop, the doom and gloom, as a writer, I know sometimes you're running against the deadline and you have to have something out. I also know that, having that kind of bold statements is really important. Like cities are dead, offices are dead, right? Those get clicked. But whenever I read those articles, they're so shallow as far as the data goes, right? Like I say, they might throw one occupancy number out. Oh, look, occupancy is below. They might grab one or two examples of buildings that are struggling, right? Oh, this building sold for so cheap. Look how much someone bought it for, and they're selling it at that, right? And then they extrapolate the entire, urban landscape in the US over those kind of small data points, right? And so this is really great where you and I are going to kind of break down what's going on and really look at the data that can support this. So, I know you are going to set up a little bit about where you're getting this data, and I think that can help inform kind of how we have this kind of inside view. And yeah, I think it can really help. So if you want to go ahead and start, and we can dig into some of these the data behind all of this.
Yeah, sounds good, Rinko. Just want to say also, it's a super interesting topic because I've been in many conversations with different people who work in the office space, work in the retail space, and I just have to preface it by saying it's so nuanced. Every market, looking at the different downtowns, even, different definitions of what a CBSA is, and in terms of, how big the city center is versus like how large the perimeters are, we'll find all sorts of really interesting data for that. But let me go ahead and share my screen. All right, we've got all right, and then let me make this larger, put it on our slideshow. How's that? Are you able to see that?
Yeah, looks great.
Oh, sorry. I'm at the very end. Hold on one second. There we go. All right. So here we have our topic question, which is which cities are still thriving even with low office occupancy. Let me go ahead and minimize the screen over here. All right. So we're going to start with an intro, talk about return to office across the US. Like Franco said, Q&A, go ahead and put them in the little chat box throughout. We don't need to hold them until the end. But I'm just going to start with a short intro with Placer, kind of who we are, who some of our clients are, etc. So just a little kind of background about how Placer works. Our data comes from mobile devices. So what we do is we partner with panels that have participants who have opted into sharing their data with us. So as a result of this, we can look at tens of millions of mobile devices that we have as our core panel. And this data gets extrapolated to the US population. So as a result, we can look at the base level at things like foot traffic. We can see how things are going in terms of people's visitation. Our data goes all the way back to January 2017 up till present day. So we have a 3-day lag. So it's basically real-time data. In addition to just foot traffic, we can look at things like year-over-year variance, all the way back to year-over-5-year variance. Interesting data on trade areas, household populations, and incomes. We also have some dashboards for things like migration and return to office. So that I'll be speaking about today. So yeah, this is basically how Placer works. It's all this data is anonymized and aggregated, so it's scrubbed. We don't know that it's you, Travis, or me, Caroline, for instance, in our data, but we do know what a device might be doing and what zip code it resides in. So here are just some examples of the types of information that we have. Visitor journey, one of my favorite ones. I like to know where people have been before or after. If you are a brand or a store, we can look at cannibalization, what might happen if you were to open in a new market. For the marketing people out there, you can actually do retroactively look at events that were held, and particularly in places where there might not be ticketing or something like that. You can actually get a sense of how many people have come to your event. Void analysis, very popular with many of our commercial real estate clients. And so this is just a tiny, tiny little sliver of what Placer can offer. And so, looking forward to diving in even deeper. Here's just a quick snapshot of some of the logos, probably a lot of familiar logos to you out there. Commercial real estate, of course, we have there in the top right-hand center. Many that will be familiar to you on this call. So with that, I'm going to just jump into our sort of bread and butter, looking at return to office across the US. This is probably a main, slide that people are interested in. What we do for our return to office dashboard is we look at about 25 or so of the top markets across the US, and we have about 50 buildings or more in each kind of area that is kind of representative of the office population. And you can see here that, we are slowly but surely, coming back to compared to the March 2019 index. So we're looking at about, 5 years prior, definitely want to look at pre-COVID, so we get a sense of what's happening. And here we see obviously that drastic drop that happened March 20. And on a nationwide basis, we're slowly kind of peaks and valleys here and there, but we are slowly kind of returning and going on sort of an upward trajectory there.
Yeah, and Caroline, one thing that strikes me here is just, the metrics you guys use are just a little different right off the bat, right? I think mostly when we see the return to office stuff, obviously there's badge swipes that are used. Oftentimes they talk about daily, right? Daily visits. And I think in a hybrid world, like that isn't a great example of how an office is being used, right? I think offices could still be very valuable, very useful, and not necessarily get as, even close to as many daily visits as before, right? But this idea of monthly visits, I think really is interesting, right? That it helps kind of boil down like, okay, are people still going back to the office, at least occasionally, right? Do they have to come in for a team meeting? And I think that more mirrors what the kind of current hybrid work situation is, where people kind of, they at least come in once a month. They usually come in a few times a week, but there are some that probably, are mostly remote. But if they still do need to have the office, right, that tells us a lot about the office demand.
Yeah, absolutely. And one of the, cool things about Placer that we do is we are able to, set parameters for how long someone is in there. So if we wanted to set, 4 hours as the limit, as opposed to, a full 8 hour day, we can do so. And to your point, I think the hybrid part is very important because as you'll see later on in the presentation, the fact that people have so much more flexibility in some of their, office going and returning is really affecting some of these other industries. So fitness, obviously the time when you're dining, when you're running errands, that is also going to be affected by, how often people are, let's say back to an office in a downtown or even a suburb. Or if they're working from home, perhaps they might, have some of their daily activities now closer to the home. So it's kind of a mix of things that is happening right now with the way that people are returning to office.
Absolutely.
All right, so this is another slide that people are probably going to be quite interested in. So looking at just year over year, we are seeing that San Francisco and DC are having some of the higher comeback rates. And then compared on the right, here we see compared to 2019, which is pre-COVID. So I would say currently compared to pre-COVID, the winners we're seeing are Miami, New York, and DC. Lagging behind compared to COVID still is LA and San Francisco, so sort of on that right-hand side.
And DC is an interesting one, Caroline, because,
Mhm.
obviously San Francisco is on the higher end of the, percent change because they have more to, to
To
gain.
make up.
They're so far behind. But
Yes.
DC is on the, the top end of both of these, right? Where it's like it is gaining. I mean, maybe an
Mhm.
election year coming up could have something to do with that. But again, that's a little bit against what we've seen a lot of, which is, DC is struggling, downtowns are, struggling. So yeah, maybe we'll get into that a little bit later as we go along.
Yeah, I mean, definitely if you look at the chart on the right-hand side, I mean, so Miami has been attracting a lot of sort of New York and LA, San Francisco people. So a lot of them have been moving to Miami. New York has been really interesting. I think of a lot of the cities, it's a lot more sort of intertwined in terms of its commerce and sort of its residential. New York has also been at the forefront in various categories such as finance, media, law, real estate as well. Some of those industries where they really want those bodies back in the office. We've definitely heard in the news some of the sort of top finance firms wanting people back in the office in New York. And then DC, similar to New York, it's also, in some ways very interspersed. They're residential, interspersed with, some of those government offices. There's also, kind of a student population as well, and the government workers are back. So those are some, pretty interesting cities to look at. The ones in the middle are also kind of like actually middle of the country-ish. So Dallas, Atlanta, Chicago as well, kind of in the middle. And then California has been interesting, of course. San Francisco, we had sort of a lot of the techies, either go remote or interestingly enough, as we'll see in a later slide, some of them have actually moved within more of like a 2-hour radius. So maybe to a Sacramento or a Tahoe or something like
Mhm.
that. So like I said, it's very nuanced, and sometimes it kind of depends on how you're defining a particular, city
Sure.
or market, but
Yeah, and what
definitely
strikes
some
me is that
variation.
there's no like one thing that jumps out as like, oh, everybody said it's the commute, right? That's what people don't want to come. It's like, well, I see cities with, pretty long trafficy commutes doing well, and some, that Chicago has a great transit system, right? Boston, you generally people get in and out on the train, and so it is so nuanced, right? There's not one thing that jumps out as like, okay, this is what makes a city have a better return to office or the other. So obviously we'll get into some of those nuances, but that's my first take.
Yeah, and then one other thing I would also comment on this one, just looking at the right-hand chart, is a lot of this return to office is being driven by younger people. So in New York, I'm reading it in the headlines about how even though some Gen Z say they want remote because they're kind of used to it, there's a whole bunch who do want to be in person, who want that mentorship, who want that socialization. So you'll see, DC's always been sort of a young person's, going in for their internship or, starting off their law career, things like that. So one of the interesting things we will probably see is sort of some of the families that have fled to outer suburbs. But meanwhile, all these new college graduates are still migrating to a lot of these big cities.
We already got a question in here, Caroline. I can
Oh,
throw
uh-huh.
this at you. So it's about the nationwide return.
Mm-hmm.
So this is saying it's about 63. It's asking, is it about 67%, somewhere around there, under 70%
Yeah.
nationwide?
Mm-hmm.
Okay. Yeah. And again, that's, a little bit of a misleading number, right? We're dividing that out by every single city in the country. So, there's a pretty big skew, but we have
Yeah.
another question here too. How do you
Uh-huh.
track San Francisco return to office for office buildings, especially in downtown areas and other property types, retail, residential? Would the data affect other property use, right? So I think this is about really how are you tracking that? And I think that goes back to how your system works.
Yeah, so what we do is, like I said before, it's tracked based on mobile devices. So if someone has gone into one of the office buildings that we've geo-fenced in San Francisco as part of this return to office index, if they are in there for, let's say at least 4 hours, let's say 2 or 3 days a week, then, if we set that as a parameter for our employees, and that's what it would show. Obviously, we look to make sure the device is not like residing there overnight, would indicate someone's home. So
Yeah.
basically
And for
through our
me, that
mobile
was a
device.
fascinating thing learning about this, Caroline, is just how
Mhm.
sophisticated it gets of, it can look at if there's a ground floor retail, right? They can pull out the people who were there for 20 minutes, right? Those are
That's right.
obviously not office workers, right? It can also tell pretty accurately where you live, right? Because, they can look at where you stay for, 6 hours plus from, midnight to 6 a.m., right? Stuff like that, they've really gotten very good at pinpointing not only where people go, but where they come from, what they did there, but, based on their dwell time. So that was really interesting to me as to hear how sophisticated the statistics of it all
Yeah,
boils down to.
that's correct. I mean, we wouldn't know the specific address where the device is residing, but we would know the zip code. So
Mhm.
we could see if you've, commuted to the office or something like that, and your device was then overnight in a different zip code, for instance. Here we're taking a look at just some of the overall migration. So looking here at the net migration, that's kind of a combination of people who have moved in and out. So depending on sort of what you use as your baseline, obviously this chart's going to look a little bit different. We here are looking at January 2020, so again, pre-COVID, versus January 24. And so this is sort of net migration. And so just a mix of people moving in, moving out, et cetera, but sort of where we landed in January 24. We see the main three sort of areas, metro areas that have seen increased net migration are Dallas, Fort Worth, Atlanta, and sort of that Houston area. Meanwhile, all these other cities have seen sort of negative overall migration
Mhm.
in the past couple of years.
And again, it's not perfect correlation with the return to office, right? Houston was on the lower end from your last slide, and it is getting positive, like, migration absorption. Miami's negative and it's doing well, right? So it's not, that
Mhm.
doesn't seem to be a perfect one for one. Oh, this people are leaving California, people are leaving, all of those narratives, I think, get kind of broken very quickly too, because those aren't necessarily your office workers, right? And people can, a couple percentage point change in population might not affect your return to office as much.
Exactly. This is a very, very macro view. I mean, if we were to dive into, let's say, what segments are moving in and out, what the household composition looks like, it will look very different. So kind of as we were talking about in the previous slide, how a lot of this return to office is being fueled by certain industries, for instance, or perhaps certain sort of age cohorts. It kind of goes to make sense, like people that are more, let's say, Gen X or late millennial, they might have families, they might want more remote work that allows them to, spend a little bit more time at home. Meanwhile, if you are, let's say, just out of college, let's say you do live in New York and you are in a tiny apartment or sharing with someone, you're probably going to want to come back to the office. It was very interesting. I was at a real estate dinner the other night, and they were talking about how it's return to office is so much greater in other parts of the country. So, for instance, in a Tokyo or a Hong Kong or something like that, where it's very, very urban. People live in small spaces, and then also, perhaps culturally, parts of
Sure.
Europe, parts of
Other parts of the world are
Asia.
definitely doing better. Yeah.
Hmm.
I think we've heard and seen that a lot, right? Culturally, here we seem to be okay working from home, but other countries are very much more putting in the time at work. We have another question, Caroline, I'm going to throw at you. And this is actually something that was emailed to me before this
Okay.
webinar. It's just about, the data in the suburbs. Like, what's your coverage there? Obviously, a lot less migration, but my guess is that you still have enough to give me
Yeah,
some
that's
information.
always the popular question when I go to conferences. People want to know, oh, I live in a smaller city or something like that. Do you cover us? Answer is absolutely yes. I've done research, not just kind of these large metro areas, but we can get down into the hundreds, the 500s, et cetera, looking at secondary markets, looking at tertiary markets. And this is actually where it does get quite interesting. So I'm just going to pick on Dallas as an example because I've been doing some work on Dallas. And Dallas has had a really interesting sort of migration story. So yes, as you see with that 1%, the migration is up. But it's kind of interesting because Dallas is having a little bit of a donut effect. So a lot of the people are moving to some of those outer suburbs in Dallas. Um, Interestingly, Dallas is actually one of the cities where the people moving in actually have sort of a lower average household income than some of the people that were existing. As a counterpart, Miami, for instance, is having had a lot of influx of people with higher incomes from their origin destination going into Miami. So those are just a couple of the things that I would strongly suggest if people were interested in diving deeper. This is the type of information that Placer can provide literally at that granular level. You can have different ways of interpreting how you want to say markets. You can do it just by population. You can look at population density. You can look at sort of change percentage in population growth. You can choose what your benchmark is. And so that's one of the things that I also do is I do a lot of custom consulting with our clients who are interested and say, hey, I think the top 25 markets are just saturated. What I really want to understand is,
Mhm.
what are the markets in North Carolina, in Tennessee, that are growing.
And there's so much less data about those, right? Colliers and CBREs don't put out, big reports about those markets, right? So I could see the need to dig a little deeper and find some more information.
Yeah, and I think especially in the context of what we're talking about today, which is return to office and some of this hybrid work, with people wanting to have, larger spaces, perhaps a slower pace of living, get out of the city. What does that mean for some of these secondary and even tertiary markets? What are some of the, brands that are going to be moving in, Walmart, Five Below, Starbucks? Like there's some major ones that are already in the smaller cities, but what are those sort of other chains that might want to grab that certain
Trader
level of
Joe's.
population? Trader Joe's,
Everybody
everyone's
wants a Trader Joe's.
everyone's favorite. So this one is pretty interesting too. So this one we called Thriving Cities Even Without a Thriving RTO. And here you can see some of the different industries that are involved. So at Placer, we have like an industry index. So if people are not familiar with it, we can start at the smallest POI, which is a point of interest. So let's say we wanted an individual Starbucks, we could, geofence that and tell you about it. we can then just sort of keep building on that. We can say we want to know all the Starbucks in LA. Now we want to know all the Starbucks in California, all the Starbucks in the nation, and then together that becomes the Starbucks chain. We do that same for Peet's, for Coffee Bean, etc. When you add those all up, that becomes the coffee industry. So that's another interesting thing about Placer, sort of the granularity at which we can do. We can literally look into foot traffic at an individual Starbucks, like let's say, one just opened up around the block or something. But we can also, continually aggregate. We can have coffee. We could have coffee and breakfast. We can have, all things like that. But just taking a look at the charts that we have here, we can see that Boston on the left has seen some, increased month over month, month over month increased visits to things like coffee, shopping centers. Obviously, dollar stores and superstores have been doing really, really well. This one on the right for San Francisco, this is actually San Francisco CBSA. So it encompasses San Francisco, Oakland, Berkeley. So it's actually much larger than just the downtown itself. But you can see here also some of the different categories that have been kind of growing. And like I mentioned before, that sort of San Francisco Bay Area is a very interesting location because even though there has been some, people leaving from the downtown, they haven't necessarily been moving like cross country. Some of them have just been moving an hour north, an hour east, in the search for more space.
When you say super center here, Caroline, define that for me. Is that a Target or a Walmart?
Yeah, it'll be like a Target and a Walmart. Yep.
Yeah, it's interesting that they are so much higher, right, than shopping centers. My guess is that a lot of people actually have to travel into certain cities to get these, right? If you live in the suburbs, you might not be close to a large super center.
Yeah, and then also from sort of an economic perspective that we've sort of been seeing the last few months, a lot of people have actually been sort of, I guess you would call it trading down a little bit. So whereas you might perhaps have bought, I don't know, your clothes at the shopping center, maybe now you're open to buying them at a Target. And then on the other hand, you have people who are also trading down from even superstores to dollar stores and things like that. So sometimes
Mhm.
it's also economically driven in terms of what's
Sure.
shaping people's behaviors.
Economics, sure, culturally too, right? I think
Mhm.
obviously the struggles that Peloton has had has proven that people don't love to work out at their house, right? Or they don't. And so, looking at the big winner here is fitness, right? That's with all of the home gym equipment stuff that you have and all of that available to you, people still generally travel to the gym.
Yes,
So
it's very interesting that things like in-home fitness really, really the demand got pulled forward during COVID. Like I'm sure Peloton that you mentioned probably had a certain steady growth trajectory. Suddenly COVID happened and bam, kind of like everyone who would have wanted one immediately bought one. And so, they are also, I guess broadening some of their appeal by doing different types of remote classes, and they partner for a while with different fitness gear and things like that. But I truly believe that we are a tribal people, and that's why we do like to gather. At Placer, I kind of head up our shopping center research, and we've definitely seen a bounce back to that. I think people enjoy kind of exploring and kind of being around as long as there isn't sort of that fear we had before of exchanging breath with people or something like that. But fitness and being out and about shopping, dining, entertainment, I think those are sort of intrinsic to things that people appreciate doing.
agreed.
So we'll take a look here at some of the who behind the migration. Some of these cities, like we mentioned, do have the wealthier newcomers, such as Miami. So Miami, definitely, we are seeing the people that move in are, have higher household income than sort of the existing people there. And it does seem to be, somewhat correlated in this case, that the wealthier ones are also, in these areas that have stronger return office as well.
Yeah, go back real quick to that, Caroline. I
Sure.
just wanted to, so, that wealthier is generally coming what from the census data of where they live?
Yes, yes. So we have data on the average HHI of the origin. So if Miami, for instance, if you visualize sort of the U.S. and on our placer data, we use like red circles and green circles. So Miami's going to have like a lot of green circles kind of coming from, let's say, a New York or an LA or something like that. So
Mhm.
Miami is definitely one that had been attracting quite a few people who had higher kind of origin incomes.
We have another question that came in here, Caroline. It's
Mhm.
about your kind of Bay Area, larger Bay Area. It's asking to see if that didn't include San Jose, Silicon Valley, South
Not
Memphis,
in
right?
that particular chart. No, that one was the San Francisco, Oakland, Berkeley one.
Yeah.
But yes, again, Bay Area is very broad. So depending on how you define it, if in some cases it does go all the way down to San Jose.
Yeah, but things change a lot, right? I could see why you
Hmm.
wouldn't want to pull that in because San Jose is very much its own
Hmm.
place, as similar
Exactly.
as it can be to San Francisco. So great, thanks for the question.
This one, Franco, you and I talked about, that's super interesting. So we had looked here at sort of what's going on in Hudson Yards, and saw that some of the office buildings in Hudson Yards had been outperforming the New York office space. We had looked at, some of the things that are kind of around that area, in terms of, like the Jose Andres Mercado is right by there. I know I believe, reopened the vessel recently. There's also some creative space. So it really depends, it's so hard to just say office space in general because, there's different classes of buildings with different amenities, obviously different neighborhoods, different industries that are in different neighborhoods. And so, that's sort of one of the things that we try to do at Placer that we've worked on, some custom projects with clients on, is actually looking sort of at the neighborhood level. We'll work closely with them to identify, buildings that they want geo-fenced and sort of, helping to define a particular neighborhood.
Hmm.
So it's not like, the easiest analysis where you can just say, here, I'm gonna like geo-fence an entire neighborhood and see how the return is there. I think, one of the differentiators of Placer is it isn't just badging. And I won't speak to the competitors, but if you're looking at one of the badging ones, you definitely want to look and see like what buildings are they considering? Are they class A? Are they class B, C, et cetera? Where are they located? So those are just
Yeah, I
some of
mean,
other things to
that's what you
consider.
just hit on what jumped out to me, right? Which is the one big kind of through line trend that we have seen is the class of buildings, right?
Mm-hmm.
Generally, the class A plus trophy, which I would argue Hudson Yards, I mean, they're brand new buildings, beautiful location, right? Is that right? That they tend to perform, and people want to go to a really nice building, right? They
Yes.
don't. They just prefer stay at home if they're going to go to some average, class B or below building. So I think that jumps out. Another thing, obviously, from having gone to Hudson Yard, one, there's a mall there, lots to do, and lots of other reasons to go there. There's also a subway stop right there, right, making it very easy and convenient to get in and out of. So I think a lot of things are playing in the favor of Hudson Yards that obviously are working, right? We're seeing real time that they are, outperforming the rest of New York.
Yeah, and to your point, I mean, sometimes you think about sort of where it's located, what other amenities are going to be there. That can actually play into, people's desire to go back to the office too. Are you going just back for the office? Are you going back to somewhere where, it's really nice, you can run some errands, you can do some shopping, you can go out for
Mm-hmm.
happy hour afterwards. So I think as we slowly kind of go back to sort of a new normal in terms of return to office, those are definitely some of the things that people would want to keep in mind as well.
Yeah, my sense is the latter is true. Most people that go into the office also take that opportunity to go get salad at that place that they like down the street
Yeah.
and go to the fitness center and do those other things that is the reason that we love downtowns in the first place, right? Got another interesting question came in here. It's do you control for a building's economic occupancy when comparing visits? The building that was fully leased occupied in 2020 might be only 70-80% today, and that would impact visits. Do you look at that at all, or is this just bulk visits?
This is just right. Yeah, we haven't quite put in that additional layer. We do know that, certain leases are longer than others, or some, obviously with some of these Class A buildings that are brand new, there's not as much to compare to historically. I think, when we get into, custom consulting, if that is one of the parameters, we definitely would find a way to put that into the equation.
Mhm. But at the end of the day, that's really what people are interested in, right? If we are trying to look at the economic viability of an office,
Hmm.
I wouldn't want to control for that, right? Like I would want to know just bulk, but I could see a reason for that, right? Of if you're pinpointing one building and you're trying to learn, how those tenants are returning to work, then yeah,
Exactly.
I could certainly see wanting to boil that out. Thanks, Phil.
So here we're taking a look at, we're both from California, so went ahead and took a look at some of the California cities. So here again, we have that San Francisco chart about whether or not it's making a comeback. Answer is yes, slowly but surely. The trajectory is probably not as much of an angle as people would have expected. It does seem like there's a little bit of push and pull between employers and employees. San Francisco is one like we like to keep an eye on because as you saw in some of those earlier charts, it was sort of, lagging compared to COVID. But in the meantime, I've been reading articles in the press about how, San Francisco has such a pull because it's such a center for tech and for investing. And people have tried going to Austin and ended up coming back, tried to go to New York, tried to come back, just because there's really so much more like of a Silicon Valley sort of, nexus there. So that will be interesting to see as kind of time goes on, whether it once again becomes sort of the magnet it was for the tech hubs. And then LA, we wanted to take a look at as well. Obviously, there were the strikes for a while that people that was affecting LA, and also LA has a probably I would say a more diverse set of industries than San Francisco has. So here we're seeing kind of the LA one again. It's interesting what we're seeing in sort of 24. Things are sort of like 23, 24. Things are kind of flattening out. And so, time will tell if we kind of stick all with this sort of hybrid thing and it flattens out, or if something, happens to spur, bringing the hammer back down on employees. We're just gonna keep tracking this and see what's gonna happen.
I'm thinking back. I could go back real quick, Carly. I want to look at this. I'm thinking back to your comments about the age groups, right? And um, obviously there is a lot of overlap between LA and San Francisco, right? There's a lot of tech, especially kind of west side of LA. San Francisco is
Hmm.
almost exclusively tech, right? But
Yeah.
when I look at the age groups there, LA seems like a bit of a younger town, particularly people that are living there, right? I think the prices of houses in San Francisco make it, and rents and apartments make it maybe prohibitively expensive for the kind of the younger group to live there. I think a lot of them live in the exurbs, kind of like you talked about, right? And Vacaville and kind of outside. So how do you think that plays into this, right? If you do need this younger crowd to bring your office occupancy back, I mean, I would say that is a case for we need more affordable rental stock, right?
Yeah, I mean, for sure. Like LA isn't, so I'm from LA, I live in LA. I mean, LA is very interesting because there's such a mix of different types of industries. So, I know a lot of people in the creative world, for instance. There is some tech here on the west side. There's also, there's finance, there's law, in kind of the Century City or downtown areas. Um, people do want to live in these like hip neighborhoods, whether it's like a Silver Lake or Playa Vista or something like that. But yes, with definitely the commute that's involved in some of these cities, like LA, probably to me does not feel like people have left, even though it says in the data people have left. It doesn't feel like that when I'm
The
sitting on
freeways don't look like
the
people have left.
405 or the 10. But yes, I think LA is interesting. We do have a large population of people that are kind of like squeezed in together in terms of housing, and so that's one of the things that for sure would be helpful would be more affordable housing. I mean, LA for sure people are moving out to the Inland Empire. That's one of the kind of big areas that we saw
Mhm.
people moving out to. So again, it comes down to sort of what is that push pull between hybrid work and being in the office full time. Would you mind if you do work in sort of downtown LA, but if you only have to come in 2 times a week or so, maybe you can just find a larger place farther east and
Mhm.
deal with that commute twice a day. So here we are back to Miami. So again, we were, curious about who's fueling some of this, migration to Miami. And then based on the data, so we looked at both sort of the metro area as well as what we're calling the origin area. So you can see here that, the people moving to Miami are a slight bit younger than the ones who are already living there. And then same with sort of that income. So the origin metro areas have the higher income. And so yeah, Miami's kind of an interesting place because it did attract a lot of sort of, New York, LA, San Francisco people during COVID. And as a result, it got lots of these sort of younger, wealthier people coming.
Yeah, and help me define this power elite young city solos. I love this segmentation, but maybe let's hone in on exactly
Yeah,
what we're
so
talking
so
about here.
usually power elite are going to be the ones who are usually around let's say middle aged or so, but just definitely in the higher earning groups. They tend to be in the professions. Young city solos are going to be the ones that are more recently out of college, but sort of on that trajectory. So in those similar sort of professional categories, once they get married and have kids, they'll probably become the power elite. So when we look at the segments, they're often divided by sort of their kind of age cohort. And so within your age cohort, sort of how that might define you. There's all sorts of different segments. Some of them are based on sort of, more urban orientation. Some are, more rural, some are more suburban, et cetera. But generally, Power Elite and Young City Solo segments are two of the more sort of attractive ones because they're the ones that generally have higher spending power
Mhm.
and higher discretionary income.
We have a question here I'd love to throw at you.
Mhm.
It's about the time of day. Like, do you have the time of day that would be applicable for traffic patterns? So, can you hone in that closely to say, okay, what is the movement, between 7 and 8:30 and 4:30 and 6:30, let's say?
Yeah, actually, that is perfect. I believe that's our next slide. So that is a great question. Yes, we do have that availability. So in the Placer data, we are able to filter.
Hmm.
So you can filter anything from, we have a nightlife index where we're just looking at Thursday, Friday, Saturday night from 6 p.m. to midnight. We can also just look at traffic to certain places, by day part or things. So that's actually a perfect segue into this slide. So we looked at, various types of visits. For instance, we looked at malls, we looked at steakhouses. And question: Are we all becoming early birds? So one of the really interesting things we've seen as a result of having some of this flexibility is that people are actually shifting in some of their behavior. So if you look at this one, for instance, on the left, weekday mall visits are increasingly in the afternoon and less in the late evening. And so that'll make sense because if you have a decent amount of people, let's say working from home, you can just go to your local mall at, let's say you want to just finish right at 5 and you've already started your day, as opposed to before where you might be at the office, then you might have to kind of like settle up and get your stuff together, drive over to the mall, etc. So some of those things, some those activities are sort of moving earlier in the day. We're seeing the same thing with sort of some of these steakhouse restaurants. They're drawing a higher share of mid-afternoon visits. We at Placer, we write a weekly newsletter called The Anchor. So there are four of us on the team who have weekly content. We cover everything from commercial real estate to retail, tourism. Most recently, I was writing about sort of healthcare and real estate, but it really runs the gamut. And one of the really interesting articles that then also got picked up by the press was how basically, we're seeing this trend of people just eating earlier and earlier. This is also, I don't know if you guys have seen the other articles that are talking about how Gen Z likes to like brag about being in bed by like 9 p.m. So there's certain things that are happening sort of culturally, and maybe it's related to COVID that we just kind of, now that we have a little more flexibility, a lot of people are, hey, let's just eat an earlier dinner. Let's move the time up for when we would normally visit a place.
Yeah, yeah, I think people feel more willing or able to get off work a little early, right, and go to these places that, maybe meetings. No one expects you to be at the office until 5. I do think there's a bit of Obviously, this has been a thing in LA for a while, but the rest of the country is learning about planning around traffic, right?
Mm-hmm.
Like
Mm-hmm.
going in the eating while while everyone's sitting in traffic. But I think this is fascinating just to see how that kind of yellow segment has shifted up, where most people are doing most of these activities more now, a little bit later in the day. But at the same time, I mean, it's pretty consistent throughout the day. I thought we would see more spikes, in the middle of the day, but certainly plenty of people are still going to these places, in the mornings and in the late evenings too.
Yeah, and I've done some of this analysis too for sort of fitness centers and boutique fitness, and you'll see kind of similar trends where, before people used to go work out mostly before work or after work. Now we see a lot more variation, people going to the gym at 2 p.m., people playing pickleball 4 p.m., things like that. So I think there's just a lot of flexibility that, has come as a result of this like massive sort of shift that we've seen in times that people are working. So, that is interesting too, because then that has implications for, where stores might situate themselves. They might want to be where, if you are in a place where people are working a lot remote, maybe you want to have your outdoor center that has all their sort of daily boutique fitness, daily, salads, smoothies, things like that, more available to them.
Interesting.
Okay. And then, as I was saying, so this is sort of one example of, one of the sort of categories that are thriving in LA and New York. For instance, I would say fitness is one of the big winners that we've seen since coming out of COVID. I think people are, really interested in health and wellness, and I don't really see that changing. So, along with that sort of increased flexibility, this is sort of one of the categories that we saw. Um, that has increased year over year. I think that's it. So open it. If there's any more questions.
Yeah, we have one question I'll just throw out. This will be circulated afterwards. You'll get an email with an on-demand recording, so you can certainly send that around to whoever you'd like. Thanks for that question. I have a couple of questions, right? So I think one of the things that we talk a lot about when it comes to, helping cities survive this kind of shock, right, of not having as high office occupancy is building more housing,
Mm-hmm,
right?
mm-hmm.
And obviously, like that's kind of the easy one. I don't think it's as easy as it said done as it is said, honestly, because I don't think a lot of these conversions really pencil. There's all kind of economic incentives to help, and certain cities have figured out ways to help developers kind of build more housing. But in my mind, we're kind of missing this retail component, right? Which you have already shown is really powerful, right? That people want to come to the office for these other non-office related things, right? So have you heard or seen any cities or maybe any talk of maybe trying to incentivize retail in a way to help bring kind of that vitality back to a city center that would bring people back to the office?
Yeah, I mean, I think for, civic organizations, that's definitely one of the draws, right, of a place. I want to say, like most recently, one that I've heard of here in LA is at Eighth and Fig. So there's actually a huge apartment building that has opened up that, very nice. And they did interviews with people about, why have you decided to move into downtown LA? Isn't it on the on the downswing, et cetera? But there are still that cohort of people who desire that sort of walkability, that sort of vibe you get from living in a downtown, access to restaurants, access to cultural events. One of the things that I think we've seen draw a lot of traffic, for instance, is having, a stadium or sports or something like that. That can often be like a very magnetic draw for, people coming into a city. So over in DC, for instance, they are managing to kind of keep their teams in the heart of DC. As a result, that draws a lot of people who go there for, dining beforehand, retail, things like that. I think it's important to have retail in a downtown. It's, kind of like having, the high street that you can, walk around and sort of enjoy being out in the city. I mean, New York has actually had a pretty good like return for its high streets. So Madison Avenue, Fifth Avenue, Soho, those are all seeing people come back. So I definitely think retail is one of the big draws that, will get people back into downtown.
Yeah, I have the same sense, right? And I remember I interviewed someone from Gensler that was they doing feasibility studies about conversions, and the two big metrics they look at is one, what's going to cost to convert an office into housing, but two, what are you going to rent that housing for when you're done, right? And so in my mind, having a vibrant neighborhood where people want to live and will pay a premium to live is really the key to getting those conversions, right? Because they don't pencil, and I think a lot about, in New York, like, downtown compared to midtown, right? Both have aggressively tried to do office conversions. I feel like when you go to midtown New York, it still feels kind of like, a financial district. It's kind of dead after 5 o'clock, right? Yeah, I know more people are living there, but it still doesn't have that same. I mean, maybe, there's there's Times Square, but none of the locals ever go there. So that doesn't really count. But whereas downtown, you go down there and it's certainly they have a lot of conversion and it feels more like a neighborhood. It has that retail. It has those things that I think support that kind of nightlife a little bit more. So yeah, I think that'll be a big piece of this to kind of figure out, right? For both cities, city leaders and real estate leaders, right? Is how do we kind of build those pieces to make these areas where people want to come back, right? It's not just the office. The Class A office is only going to do so much. So I have a question here about, do you find that access to pedestrian infrastructure like walking, biking as commute alternatives foster return to work or downtown activity?
So we haven't looked directly into that. I mean, I think that is something that could be studied more. So, like I said, I live in LA. I was just in Culver City yesterday, so that's kind of an interesting experience there, where they've started, putting in specific bike lanes. I think Santa Monica is the same. I think there is a desire, especially in locations that have nice, mild weather, that if possible, to bike to somewhere, yeah, have the bike lanes or the bike access, things like that. I think, that is definitely one that we could see, envision, Placer working with sort of city and civic organizations on, to kind of study the, how many people are in a certain area, like what their habits are. Um, I agree with that. I think if we made it easier to do sort of public transport slash biking, things like that, I think a lot of people would probably enjoy that alternative.
Yeah, I think we're going to see it more and more, right? I've read a lot about, one of the barriers to return to the office is the cost, right? That
Mhm.
sometimes they even expect to get a little bit more, right? The employees want more because that's a cost for them. And as,
Yeah.
gas prices are going up, car insurance prices are going up, right? As that becomes a bigger piece of our daily, spend, I could certainly see that being a plus. But I think you said it's really weather dependent, right? In certain places, I think it makes tons of sense, but I don't see a lot of people biking to work in, Miami in the middle of summer, right? Like
Right.
it's just by the time you got there, you'd be so drenched. Yeah, you probably, need a shower and a complete change. So, another question here about any data about the movement of people within the Bay Area. I think this goes back to what we were talking about with the kind of exurbs. Also from
Yeah.
Bay Area to Sacramento, is are high income people moving out? What is the average income of the people moving out? Obviously, that's pretty specific, but from the kind of work you've done, what are you seeing insofar as, who is moving out of the Bay Area?
Yeah, so generally speaking, I would say the same as for kind of any big city. We see a lot more of sort of the families moving out. So there are affluent families kind of moving out to some of the more suburban areas. Like one of the ones we saw a huge increase in was like Roseville, kind of in that Sacramento area that had a big influx the other day when I was just looking. So Concord, for instance, some of those that you might see sort of at the edge of the BART station, but people are moving to, you can get more space, for your family. And then same in San Francisco, as I said, with New York, it's often that younger cohort coming back in. So, people who are wanting that sort of city vibe, maybe can handle having, smaller square footage of
Mhm.
housing. That's the general trend that we're seeing. So
Yeah, I
we'll
can
see.
see that.
We'll
Does
see.
housing size, right? Kids, no
Yeah.
kids. Obviously, there's a big divide there. That's always been a reason people move out of the suburbs. But I
Hmm.
think we are learning too that one of the main uses of the office is of an office is to kind of climb a corporate ladder, right? To meet your bosses, to get that face time. And I could see where the younger cohorts value that more, right? If you're already a senior manager at a company, you can throw your way around and only come in, once a month. But if you're the new hire, you might be more willing, and it might be more necessary to be in every day and get that face time. So thanks
And
for
and
that.
the other part of the, making sure the office is attractive is, so we talk about the younger cohort wanting to come in. It's not just for socialization, but also for mentorship. So how can you make that office more attractive to the
Mhm.
millennials, Gen Xers who would be needed to come in to be the mentor? It's funny because it's actually like both ends of the spectrum. It's actually Gen Z and the boomers that are most kind of excited about going back to the office. And if you think about it sort of demographically, that makes sense, right? Because boomers are less likely to have, let's say small children or dependents or something like that. They also are probably have kind of just lived their whole life with sort of that office and getting to the corner office mentality. So we kind of have those like two extremes on the side, wanting to come to the office, and then you've got that middle who are going to be likely your middle managers or upper management who are a little bit more resistant.
Absolutely. Yeah, I mean, I guess with a couple minutes we have left here, Caroline, I just want to hear a prediction from you, right? Like, what do you think are going to be some of the trends that we talk about, in the next 5 years? Are we always going to just talk about the death of the downtowns, or are we going to start having different narratives?
I'm always bullish on downtowns. I mean, I'm a city girl, so I like having vibrant downtowns. I think, there are certain things that cities probably need to address, for instance, crime, obviously. So that's one thing that like here in California, we've seen, people have been kind of light on crime. We were seeing kind of the pendulum go the other way now with wanting to be more serious about that so people feel safe either, taking the metro or coming into downtown or something like that. Um, I think, like we saw with sort of the bounce back of fitness and entertainment and dining, people are going to always enjoy that lively aspect of being around people. And I think there's a certain energy that when I'm in downtown, I feel that you don't necessarily get in a non-downtown situation. Um, I don't think the climb is the return to office is going to be like a sharp uptick, like as probably a lot of commercial real estate is hoping for. I think it's going to continue to be a push and a pull. We're going to, see people kind of making individual decisions, like the ones who want to come to the office full time. They're going to be attracted to the jobs that say on site 5 days a week. If you look at like job posting sites and things like that, they say that the number of 100% remote jobs has dipped. I think it's less than 10% now or something. I think most jobs are either hybrid, some are even fully on site. And so that's sort of a bit of a reckoning now. They're sort of rejiggering expectations. There was that brief period of time where almost all jobs were hybrid or a 100% remote. And I think we'll see a little bit more of a swing back to hybrid or on-site for
Yeah,
jobs.
I tend to agree, especially if the economy, keeps on its downswing.
Mm-hmm.
People are going to need to work a little harder to keep their jobs, climb the corporate ladder, and that's usually means going to the office. So
Yeah.
I know there's a lot of questions we didn't get to. There's also some requests to be introed to Caroline here. So if you have any follow-ups, feel free to email me. It's franco@propmoto.com. That's FRANCO at propmoto.com. I can facilitate all of that. Just want to say thank you so much, Caroline, for the great presentation and all of the interesting data. Thanks everybody here for joining us. We will be having more of these in the near future, so please stay tuned for more. But in the meantime, I think we all can take away a little bit about exactly what's happening in the downtowns. And my big takeaway is that it isn't as clear cut as a lot of the media out there would like to make you believe based on their headlines. So thanks again, everybody, for joining us, and see y'all next time. Have a good day.
Thank you.
Bye.